What's going on? My name is Amy Nicholas. Welcome back to the channel. If you're new, say hello down in the comments. Today's video, recap of my trading session this morning. Today is Thursday, April 10th, and I am in the midst of a phase 3, I'll call it, 20 trades experiment. So the first 20 trades, I started trading small position sizes by trading 1 share per trade. Then I went for the next 20 at 2 shares. Now in this third phase, my goal is to do 5 shares per trade, but what I tried to do today was a little bit different. And I should say I did do today was a little bit different, where I am working on increasing profits. And I have this notion in my head because I'm reading the book Best Loser Wins by Tom Hogarth, and he's a high stakes trader. And the basic premise of that book, it's really good, by the way, is that he believes in scaling up your winners. So instead of just buying in, trying to, sell at a certain price, that's it, period. It's about buying in, the position goes up in your favor, you buy more, and you scale in, scale in. The first trade I took this morning, I was watching Apple. That was mainly my focus today. Tesla looked a little rangy. I was like, yeah, I'm just gonna put that to the side. So I decided to trade the ETF AAPU, which is the long ETF for Apple. And I initially had my template set up with my 2x shares, so buying 2 at a time. So my goal was to just buy a few at a time and scale in to the position. Instead of going for 5 though, I said, let's just keep it simple. We'll leave it at the 2 for each time I go. So the first buy-in, I got in at 1994 and for 2 shares. And it was immediately in the green. And that was kind of like my premise was like, if I'm immediately in the green and it's, looking good, then I'll add to the position, which is what I did. And I added again at 2015. Here is probably where I should have just been like, okay, my strategy is scalping, quick wins, get in, get green, get out. Because I was up, and I want to say I was probably up like at least $1 in profit. Again, this just buying 4 shares here. But I decided to keep going with that idea, and I think the gap here was just too far for what Apple was going to move. And the third time I bought in for 2 more shares, I got in at 2042. So initially started at 1994, got in all the way up to 2042, which I think was too high, like I said, for this move. What ended up happening, I got the take profit on the first 2 shares. That went off at 2031. So I made a profit on the first 2 shares. Then the second 2 shares made a smidge of profit when I sold the last 4. So I was in the position for 6 shares at one point. And then I sold the 2 with the take profit order that was preset. And then the final 4, I canceled everything because it looked like Apple was turning around. And I said, let's just exit at the market. So the last one, I actually lost about 21 cents on that last buy-in. Because I ended up exiting those 4 shares at 2021. But of the 6, I was up 43 cents. So I'm like, okay, cool. What I liked about trading like this, and though I regret doing the third buy-in for my kind of strategy, I think 2 is enough for me because I'm just trying to get in and get out quick. But what I liked about it was it taught me something that I learned actually early on from Ross Cameron, that you scale into your winners. You don't average down your losers, you scale into your winners. And yes, this can turn against you just like any other kind of trading. Like, you could be buying in and the price just keeps going up and you're bringing your average up and maybe the move isn't like amazing, but at the same time, Tom Hogarth brings up the good point in that book that this is really the only way you can capture big moves and take big paydays, because you have to keep adding. Otherwise, you're going to buy in at a certain position and you're going to be like, oh, I'm just going to buy my normal 50, 100 shares, 1,000 shares, whatever. And if you don't keep adding to that, you're missing potential gains, okay? So it's kind of this fine line of like, what's your risk tolerance? And what I liked in that book too is that he talks about him personally, because he's doing this for a long time, he will go double the position. So for example, if he bought in 100 shares of something, he will put in another 100 at the next buy-in and another 100 at the third. But he said, I highly recommend for people that are new to go a quarter position. So if I wasn't trading so small already, that's what I would have done. So for example, if I bought like 50 shares initially, I probably would have just bought in another 15 or 20. This is actually what I did yesterday. I didn't make a video for yesterday because I didn't day trade in my normal account. I actually day traded in my IRA. And it was because of the crazy momentum moves after the market took off, with Trump saying there was the 90-day pause on the tariffs. I just jumped in the computer in the middle of the day and just started trading. But I did kind of what he was talking about in those trades. And I'll talk about it in a second, but let me wrap this one up. I felt like what I was trying to accomplish in this trade was to change my thinking, change my mindset about trading, because more often than not, we are feeling the wrong feelings about a trade. For example, if you go to a loss and your P&L is going down, it's negative, you're still in the trade, you feel hope that maybe it'll turn around, right? And when you're in profit, you feel fear that you're going to lose what you already got, and you're going to give back those gains to the market, and you'll be back at square one or worse. And he talks about it in the book, and I've also heard Mark Douglas go over this as well, that we need to shift our thinking. We actually need to basically completely switch that around, that we should be in fear when we're at a loss and look to mitigate risk and get out, cut your losses quick. And that you should be hopeful when you're in profit that it's going to go up more in profit, and you stick with it, right? You ride the winners. And he talks about in this book that 90% at least of traders think the other way, right? The fear when it's going up and the hopefulness when it's going down. And he's like, if you want to be a different kind of trader, if you want to be the 10% that win, that don't lose money, that do make money at trading, this is the way you have to shift your thinking. So I'm working on that kind of stuff because that to me is really important. I don't want to be just another statistic, there's another 90%er who loses money at trading, right? No, you got to do the things that are hard in order to get the things that look easy. I'm sure someday it's going to be like, yeah, of course, this is how I trade. I always add to winning positions, And like I said, I initially heard this from Ross Cameron way back when I first started day trading in December. And I did this successfully a few times when I was trading like TSLR, which is the long for Tesla. I would buy in like maybe 25, 30 shares. Then I would add another 15, add another 20, something like that. And sometimes I would buy in twice, and if it made sense to. And sometimes I would buy in 3 times. And more often than not, I would come out on top and have a bigger position, meaning bigger profit. Yeah, probably less profit per share, but overall more profit than if I had traded just the one share size. So anyways, I should have moved my take profit level up on that first buy-in instead of allowing it to hit it and execute the sale, because at that point in time, Apple was still going up. So I could have squeezed a little bit more out of that part. And then what was challenging about that 3-part trade was there was no obvious resistance levels for Apple. There was no resistance lines on my chart anywhere near where it was trading. It wasn't near the 9 EMA, it wasn't near the VWAP. Like, it was in no man's land. And I was like, okay, it could just keep going up. Like, I think it was a good $4 or $5 on Apple itself before it was going to hit even the 9 EMA. So I'm like, okay, what am I looking for here for potential exits? Other than the stochastic oscillator, turning, which is, I think what finally got me out, if I remember correctly. No, that was in the next trade. so I'm out of this trade and I'm like thinking like what could have helped me a little bit better that could indicate where there might be the next level of resistance. And after I got out of that trade, I decided to add in the Bollinger Bands. So you can kind of see on my chart behind me here, the wavy blue lines at the top, because that at least could give me some parameters of like where this level of resistance might be, because being in no man's land, it's like without a compass a little bit. If you're looking at charts, you're trying to learn charts. Granted, I'm reading the candlesticks, I'm watching, the momentum and the size, but without something telling me like, hey, it's about to hit right here, it's kind of like, okay. And I think I could have gotten a little bit more out of that trade if I had that awareness, and then when I added the Bollinger Bands, I could then see kind of where the middle ground was between the two lines of the bands, where it would have made sense to be like, okay, Apple might reject here. This is probably a good, place to get out. So I added them. So for trade number 2 of today, I went long again on Apple with AAPU. And by this time, I'm getting in at 2059. So it did keep going. It just, when I got out the other trade, it was kind of like ranging and it was a little choppy. So that's why I was like, let's get out, whatever. I could have probably held on and not gotten stopped out. I realized this, after the fact, but it's all good. So I get in at 2059 and it really lost steam. It was a little bit in profit, then it wasn't. And then it wasn't, and it wasn't. And so I'm watching and I was like, okay, well, let me just make sure that if I exit this trade, there's a good reason that I do. Because I knew I'd exited a little bit early on the previous. And so what I waited for was not only the candles closing and turning red and stuff, but kind of looking for the stair-step action with the 1-minute chart where I was seeing 3 red candles. Where I was at this point, it was 2 red candles closed. The third one hadn't fully formed. And I'm watching the stochastic oscillator down here. And the lines were like doing this, doing this, doing this. And I said, okay, if they cross, if the signal line crosses pointing down, that's it, I'm out of the trade. And that's what happened. So that was my signal. I said, I'm out. I closed it and it was a loss of 27 cents. So I did exit, before my stop, because the stop on this would have been 30 cents. So if I had let my stop take me out, it would have been loss of 60 cents for the 2 shares. I only bought 2 shares on this one because I didn't see the need to add when I wasn't in profit right away. I was like, okay, now's the time to watch what's happening and decide if I need to exit. So that's what I did. So I think I did everything correctly on that one. It ran out of steam, used the indicators to exit at the appropriate time. And by this time I had the bands up, so I was like, okay. And I was kind of watching for that middle ground to see if it would reject, and that's pretty much what happened, is it started to go south after that. So I was still in profit, I was in a small loss. Oh, wait, let me go back. I'm looking at the wrong loss here. By the way, sorry. That one did go over my stop. Yeah, now I remember what happened. I wrote something else down here for my P&L. Actually, that one was a loss of 70 cents. What ended up happening and why it was over my 60-cent max loss was because I hit cancel all on my orders so that I could just sell at the market very quickly. So when I saw it passing my stop, by then it was a mental stop. I'm like, okay, let's get out. And that's why it was a little bit higher. So anyways, the last trade of the day, I decided to short Tesla. It was finally at a point in the day where clear direction was starting to show itself. And I could see long red bullish candles to the downside on Tesla. So I went in with the ETF TSLQ so that I could short it. And this one, I bought 2 shares and I was kind of just watching the trade. And I think part of me just got involved with being in the moment and forgot to add to it because right away I was green. And I'm like thinking, in hindsight later, oh, I should have added, right? Should have added a couple more shares. Whatever, it is what it is. At least I was focused on the trade and not the P&L. So $35.99 is where I got in on TSLQ. And this one, I think what happened, and I could kind of you just have that gut feeling, watching it sell, I kind of could see where it was at the bottom of the Bollinger Band. And I was like, okay, there's a level here that it might bounce. And I was watching that candle come all the way down to that. And it was sort of like doing this little number. And I was like, like it's either going to flush or it's going to shoot back up. And right now I feel like it's more in the camp of shoot back up. So I canceled all my orders. I manually sold for profit at the market. And this was a profit of 62 cents for those 2 shares, which was nice because it made up for, that second trade loss, so that I did ended up green on the day, for a whopping profit of 35 cents. But that was 3 trades, 2 green, 1 red. I liked how I traded today. I didn't feel like I was chasing anything or that I was, on the wrong side of things. I think in most cases I was pretty correct, other than that second trade where I'm just proud of myself for recognizing that Apple had exhausted itself. This isn't going in my direction. Let's just get out, I think that's just like a sign of being a disciplined trader, admitting that you're wrong, admitting that, you're at your mental stop. And by then it was mental and I had to kick myself out. And not worrying that, what if I hold on another 20, 30 seconds, it might go my way. No, like you just got to follow your rules, especially when it's at that point a mental one. And I was like, I kind of, by the end of it, as I'm thinking about the trading, I was glad I knew when to exit, I'm proud of myself for that. The challenge with trading like that is sometimes I just like to set hard parameters, where I don't have to think so intently about it. Because, I was stressing myself out trying to do manual exits on the trades. And every trade was manual exit except for that one first partial take profit on AAPU, the very first trade where I bought 6 shares total. That was the only one that kicked off on its own, was the first 2 shares I bought. Everything else after that, I manually was doing. And like I said, it was a little bit stressful, I guess, just trying to make those rapid fire decisions. But I know at the same time that it is a sign that I'm growing as a trader. I can handle risk management. I can make decisions quickly on the fly. So I'm not saying at any point it was the wrong thing to do to manually handle things. But I do notice the difference of trading where, you've got your take profit in your stop and your buy order, and it's just like, okay, let's just ride it out, right? And sometimes that works out, and it's nice because you don't have to think so hard. But other times it's just going to be a funny market, like it's been, and you kind of have to take control over that a little bit. So let's see if I put anything else here. I put that I was glad that I focused on the chart for the most part. I wasn't too focused on the PL, except when I was trying to get out of that second trade to see, okay, how much am I down so that I can manual stop, myself here. That was the one where it's just kind of like, okay, I got to stare at the P&L now because I don't know exactly where my exit's going to be. But otherwise, yeah, I felt like did it pretty good. And I just put going forward that I'm only going to add to my position one time until I get more comfortable doing that. Like I said, I've done it in the past where I've traded at full sizes and it was no problem to add once or twice. But at the same time, those trades, when I think about them, I was trading the pre-market. I was in the trade for longer. So if it was going in my way, great, add some more, ride it out to the open. But that's not how I'm trading right now. I'm just, quick scalps and things. So I think adding one time is plenty. And that just gives you a little bit extra boost, right? For where I'm at right now. Don't need to stress myself out like, oh, I gotta keep adding. I think that's what happened on the first trade. And actually, on the first trade, I would have exited at a better profit, again, if I hadn't bought that third time. And I probably could have been a little more focused on basically that when I didn't move that first 2 shares that I bought, if I had moved that take profit up, I could have gained more instead of worrying for that third time of adding. You know, it's like, what are you focused on? So that's the trades. But to recap what I was going to say, you know, earlier in the video about my day trading and my IRA, what I did on a trade I went long on Meta yesterday when things were soaring, and I bought the ETF FBL because I'm familiar with it. And I was like, for me, it's becoming easier now to trade these ETFs than it is to trade the full size stock, because they cost so much, right? Hundreds of dollars for Meta. To me, it just makes more sense to buy I think it was like a $28, $30 per share FBL. So what I did yesterday when things were ripping, I bought 25 initially shares, and then I added 15, and then I added 10. I think I ended up with 35. 15. No, wait, that doesn't add up. Sorry, I think I bought 15, then added 10 for 25, then 10 more. Yeah, so I bought 15, 10, and 10. And that was like, it was great. And I had a in the money take profit level that I felt like was a good technical level. And it took about 90 minutes, I think, for that to execute. Now, granted, I didn't have a stop. I will say that. That's why I didn't really like keep track of things or anything, because it was in my IRA, and I'm like, okay, whatever. Like, to me, it's not as serious trading because it's in something that's a retirement account. I'm not going to worry about taking the money out anytime soon. So that's kind of why I did that. And the markets were just like, it was just so obvious to go long yesterday. I was like, any little blips or whatever. There was a couple of trace backs, you know, where some of the shares were negative for a little bit, and then it would go back. And I just really followed continuation pattern. I was like, okay, anytime that the trend is just obvious, right? So obvious. And then you see that consolidation and you start to wonder, is it going to turn around? I really taught myself yesterday to just watch the consolidation, let the market breathe, take a breath, you know, and then expect the next leg up. And that's exactly what happened. And I think I sold my shares, all of them, for the same amount 15 minutes before the close, something like that. This was like way late in the day. Yeah. I didn't even plan to trade yesterday. But the markets were having a good time, so I decided to have a good time. So anyways, yeah, guys, I just wanted to do this recap and say, you know, for these next 20 trades that I'm doing, initially, like I said, I was going to bump from 1 to 2 shares to 5 shares and just try to keep doubling down. Right now, I really see the benefit of focusing on scaling in. So in some cases, I may get up to 4 or 6 shares or whatever. The way my template's set up, it's just 2x, 2x. So I could buy the 1x or whatever. It's not a big deal. But anyways, that's kind of my focus right now is work on being able to take more profit. Even though it does open you to more risk, potentially, of course, the chances of me becoming a profitable trader, I feel like, are greatly heightened if I learn how to trade like that. You know, like I said, I've done it in the past and it worked. So that kind of gave me the belief already. It's just a matter of trading these different markets and a slightly different strategy where I'm scalping for quick moves. But there's nothing saying I can't win just the same way. It's just in a different time frame of holding the trade, right? So yeah, highly recommend Best Loser Wins. It sounds funny, right? Best Loser Wins. The mindset behind that is, if you can handle losses the same way you handle wins, where you're just, yeah, cool, neutral, like whatever, then you are on your way. So it's really good. Check it out, guys. I'll add the book link to my day trading resources, which link down below in the description. Link should be in the comments soon. And you can basically put in your email and get access to all the trading resources that have helped me thus far get here on my journey in month 5. And hope you guys had a great trading day. I'll see you on the next one. Take care.